So we know some of the reasons the housing market is pretty stagnant. I know I have like a mortgage in like the threes. I refinance. I think that's about 60% of Americans. They have the similar situation, so not really looking to move. But I want to ask you about the spring selling season and some of this economic uncertainty. How is this economic uncertainty impacting that?
It's not helpful. Certainly, the spring selling season is off to a slower start than most would have hoped or expected for. The economic concerns are a big factor in that. It's starting to have an impact. I think there are some pressure points regarding inventory. The lock-in effect is real, but it also dissipates over time, and so life happens to people, and so we're starting to see that effect. We're certainly seeing that in Florida as we've had the effect of the hurricane impact. We've had the effect of insurance rates and various other things that have added to the cost of home ownership. And it leads to some pressure points, and it creates pressure on affordability. And of course, over time, you start to see more resale inventory pick up. And that's what we're starting to see in Florida and in Texas and in some other markets like Colorado, for example. And so we've got a little bit more competition in the market. Home prices are either stagnant or slightly falling in some of these places, and it is leading to a loss of consumer confidence. So overall, it's okay. It's not a housing collapse by any stretch. There's still a tremendous amount of pent up demand, but affordability is the problem. Affordability is still a mess, and for the builders to stay competitive in this market, particularly at the entry level, they're having to utilize mortgage rate buy downs, which is an incentive to lower the effective mortgage
Okay,
rate.
Buck, let me just jump in for a second. I
Yeah.
think that's my big question for you right now. So we just mentioned KB Homes reporting today. We're obviously hearing from home builders as they report their earnings. We heard from Lennar. When we're talking about these buy downs, how big of an impact is that to the profitability of these stocks? Does it kind of re-rate these stocks? The idea that the real way to get movement going in their business is that they have to buy down the mortgages, which I would imagine eats into profitability.
Yeah, no question. They're incredibly expensive. So the builders are absorbing the gross margin impact of these buy downs in order to keep the machine going, to keep the inventory turning, and to keep cash flowing. And they have had some excess gross margin from the post-pandemic period to be able to absorb some of that that impact. But there's a limit. There's kind of a breaking point because effectively these are net price reductions. It's just happening below the line. So it is costly. It's hundreds and hundreds of basis points. But the idea is if mortgage rates can start to normalize, and normal would theoretically be something in the low sixes, maybe in the high fives, that would unlock plenty of demand, and the builders could lower these buy downs considerably from their current levels.
Okay.
Lennar's spending double digits in terms of their percentage of incentives
Buck,
right now.
I'm an optimist. I like to see the bright side of everything, but I think we are a good way away from mortgage rates getting down to 5%. So in the meantime, can you give us our top picks with this economic uncertainty in mind? This also tariff impact. Our Robert Frank said the tariffs could likely raise the cost of a home by about $10,000. Also, labor shortages are factored in there. What are your top picks in this current environment for investors?
Yeah, I think we have to stick with builders that are at the higher end of the market and or in regions where there's less inventory pressure. So Toll Brothers is one of our top picks at the high end of the market with an aspirational luxury home buyer that has an incredible balance sheet that's much more insulated from I think the pressure points of interest rate fluctuations. They've got a great franchise and incredible land bank to backstop them, of course. And of course, we like some other regional builders. We like names like MI Homes. Main focus on the Midwestern markets where there's far less inventory pressure. And we also like Taylor Morrison, TMHC, with a resort and active adult lifestyle buyer that is far less dependent on these interest rate fluctuations.